Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor, and in today's video we're talking about a shocking announcement from the Halifax that house prices have crashed in one single month, only 1 month, 2.3%. And this represents the largest crash in 1 month since 2008, and we all know what happened then. So guys, if you like this sort of content, if you like talking about investing, what's going on in the markets, please give this video a big like. It massively helps me out with the algorithm. And beyond that, if you haven't already subscribed, consider subscribing. We have a subscriber dividend portfolio on this channel where we put £1,000 every month into it, and every time we get the dividends, we pay that out to our subscribers. So I'm trying to make sure that you guys get the opportunity to take part in passive income and see how it all works over a period of time. But I want to get into the video because this data is just too shocking to waste any more time on. Let's get into it. This is really shocking news for most people who are watching this channel. I'm going to give you the facts, I'm going to give you the bad parts of it, and then I'm also going to talk about the positive side. Because with risk comes opportunity, and there will be some opportunities ahead for all of us, and I want to make that perfectly clear. But as I said, I've got £3.5 million of property, and today I have taken a big hit on my net worth. In fact, Tom, if you follow me to the whiteboard, we will find out how big a hit I've taken. So £3.5 million, and it was 2.3%. So today, looking at all this data, I've taken a hit of 81,000 on my net worth, and this is straight off the bottom line, £547. Now that is quite a lot poorer today. So guys, that is the sort of number that someone like myself with £3.5 million worth is taking off the bottom line. And remember, my mortgages are staying the same. I've still got £1.7 million worth of debt, so that comes directly off my net worth. So I'm not feeling particularly great about this. I want to go into the detail though. I want to go into the data. I want to give you all the information. So let's get back to the laptop and go through that now. So the monthly change, as you can see, is minus 2.3%. Quarterly change, minus 1%. Obviously, we had some up months. We've now had 2 months in a row of consecutive falls, and the annual change is plus 4.7, and that was about 8 or 9%. Very recently, I remember. So I think last month it was 8 or 9%. The average house price has dropped to 285,000. That was about 290 something. So we are seeing drops across the board. Let's read through the data together though and understand exactly what's happening. Average house prices have fallen by 2.3% in November versus minus 0.4% in October. So the speed of the decrease is increasing. And that makes sense, right? The anecdote rings true. The bull walks up the stairs, i.e. house prices rise fairly slowly, and the bear jumps out the window. And that's to simulate the fact that prices crash much faster. And the reason behind that is human psychology. People are much more worried about losing than they are about winning. So we tend to find in the stock market and house prices, it rises slowly and then it crashes quickly. Then it rises slowly and it crashes quickly. The annual growth rate has dropped. Yeah, absolutely. If you're going to lose 2.3% in 1 month, that's going to go down. The typical UK property now costs 285,000, as I said, down from 292, so a good drop there. The annual growth rate has slowed in all but one region. So the northeast have escaped the drop so far during November, but it's going to happen everywhere, in my opinion. I cannot see that you're going to tighten monetary conditions this much and have no impact on an asset which is traditionally financed with interest. So let's see, but my gut is that nowhere is going to avoid this crash. So we're looking at this similar trend slowing in Northern Ireland, Scotland and Wales, exactly as anybody would expect. And we can see on this graph that it is going down absolutely rapidly. Let's have a read of what Kim Kinnaid, director of Halifax Mortgages, has said. They've said the average house prices fell in November as the annual rate of growth slowed. And then most of this is actually just repeating what I've already said. The market slowdown was expected given the economic headwinds. No massive surprise there, right? Some potential home moves have been paused as home buyers feel increased pressure on affordability. Industry data continues to suggest that many buyers and sellers are taking stock of the market continues to stabilise. Well, it's not stabilising, is it? I think that's wrong. It continues to crash. And that's the opposite of stabilising. And some of the data and the things that I've been hearing, for example, I've got estate agents phoning me up for the first time in ages, asking me if I'm interested in buying things. The last 6 to 12 months, I haven't heard from people. They've had a queue of buyers out the door. Right now, they're phoning up and saying, hey, we've got this coming on the property. Are you still looking? So that tells me that the power is shifting. And this is where the opportunity is going to come, guys. And that's why I want to, towards the end of the video, talk about how to position yourself in the best possible way to take advantage of this. This is when you can make money. When people are scared, capitalists out there can find opportunities and make money. And that's what we're going to do on this channel. So when we're thinking about the future for house prices, it's important to remember the context of the last few years. Biggest house prices ever, absolutely, I agree. They've got a long way to come down if we're going to look at pre-pandemic levels. We rose about 20% over the course of 2 years. So 2.1% plus, 0.5% last month. We're down about 3% in total. It's getting there. It's starting the momentum, but this isn't the last of the drops we're going to see. The market might be now going through a process of normalization. Okay, so this is, I guess, saying that we're going to bring them down a little bit to create more normal conditions. If you increase interest rates, you're going to see what happens. You're going to tighten monetary lending. But look at the speed of that drop on that graph. That is exceptionally steep. And it harks back to what I said at the beginning of the video. Biggest single monthly drop since 2008. And we know what happened in 2008. It was 30% crash in some regions within about 18 months. It wasn't a long space of time to get that deeper crash. We also know what happened afterwards, don't we? We walked back up the stairs and we got back to where we were over a period of time as monetary policy became more accommodative. And that's likely, not definitely, likely to happen again. And that's again where the opportunity is going to come. So looking at the regions, Northeast was the only one that kept growth. Everywhere else has dropped. Northern Ireland, again, monthly drop, but overall it's still up quite significantly. So looking at this bit of data at the end, London has also slowed, although probably not the biggest drop of the lot. Housing activity, now this bit I always enjoy going through. HMRC have said that seasonally increased, so the sales have actually gone up a little bit in October's data. 2.3% on September's data. And these are completed transactions. These are things that have got over the line. Mortgages approved in October is down 10% and down 15% against last year. So month on month down 10%. Year on year down 15%. Now that makes a lot of sense. That's 15% less people buying properties on a mortgage than last year. And that's a mixture of things. That's less properties available and also buyers leaving the market and not wanting to buy. Like myself, I am not feeling particularly bullish today. I'm not going out with a big shopping list going, what can I buy? I'm thinking there is opportunity. I am going to be buying. It's just not going to be quite yet. And the RICS residential market survey says that there is a net balance of minus 55% compared to minus 30% on new buyers. Now that is huge. That tells you everything you need to know. Buyers are leaving the market. So what are we going to do about this, guys? What's my conclusion? Well, look, house prices are crashing. This is the data. There's nothing anybody can say that says that this isn't happening. It is happening. And it's exactly what you'd expect to happen if you increase the cost of borrowing. How far? Who knows? It really does depend on the Bank of England and when they want to pivot and start making interest rates a little bit more affordable, and that will support house prices. Absolutely. But what is the opportunity? That's what everybody wants to know, including myself. Well, this is the opportunity, and this is why property is such a great investment. When people are scared, you can negotiate. That's the key. They're already being told by agents you need to cut the price by 5%, 10%. Now, if you go in and you can buy something with a 20% discount, you can be making a significant saving and giving yourself a big amount of insulation all in one go. So you're minimizing your risk, but at the same time, you've got quite a lot of upside if you can negotiate a really good discount. Is today the day to do it? Maybe not. Maybe it's not the case that today is the day where you can get a really good discount. But people are going to get more scared. People are going to lose their jobs. The economy is going to go into recession next year. In my mind, this is all fact. Now, I'm willing to look at the data and see if it changes, but in my mind, all of that is a fact. People will lose their jobs, we're going to have a recession, house prices are going to go down. With all of those facts in front of me, I think there will be opportunity. And I'm getting myself into a position where I'm going to be able to take advantage of those opportunities when they come. And I would suggest to any of my friends that they do the same. So guys, let me know in the comments your thoughts on all of this. I'm massively interested. I'll reply to absolutely every single one of you. Guys, thank you so much for watching. Like and subscribe as always, and I will see you on the next video. Cheers, guys.